All right, YouTube, what's going on? Marky TK back with another video. This is Robinhood Portfolio episode 12, and right now the portfolio is sitting on $63.71 for a total after-hours return of $9.84. We're going to talk about it all, guys. We're going to talk about the market in general, what changes have I made throughout this whole entire process of stocks falling. Is everybody freaking out? Are people selling off? We're going to talk about it all, guys. But first thing I wanted to talk about is my portfolio in general. What changes I've made, what moves I have made throughout this whole entire process, and we are just going to get started right now. So right now, the markets are really volatile. Volatility is back. Nothing's a short thing. Nothing is absolutely nothing's just nothing. Nothing's a short thing. These stocks are trending below their support levels. Some stocks are going past their resistances, but right now, when the market is volatile and the market is all over the place, all I can recommend is just to hold it out. Don't panic. Don't freak out. Just have a clear mindset. And what I also would recommend is try not to look at your portfolio throughout the day, because you get tempted, guys. You get tempted in making those moves, and it happens to me every time I get curious. I'm sitting there. I'm at work. I'm working. I'm doing my job, and then I kind of jump on my phone. Because my job allows phones, and I'm sitting there, I jump on my phone, and then after that, I'm looking at stocks, and I'm like, oh, I got to sell this, or I got to sell that. I just really wish I just won't touch anything. I just leave things the way they are, and that's the best advice I can recommend in a volatile market, because the market is just going to go up, it's going to go down, and just always remember, guys, that nothing stays up forever. What goes up must come down. What goes up must come down. But we're going to talk about my portfolio for the week. I'm only up $13, and for the month I am up $198. So the portfolio in general it's going up, it's going down. There's been news. People are trading stocks. Probably with their margin accounts, and the stocks are going down, and those margin maintenance calls are kicking in, and they have to pay the money back. There's a lot of things and a lot of computers that determine how people's portfolios are going to act. You would be surprised how a portfolio is generated automatically by machines. Most people don't have a financial advisor in their ear, or just telling them, hey, go to this stock, or go to this stock. Some people are doing due diligence and just trying to buy dips, or looking at balance sheets, and looking at earnings and share buybacks, and all kinds of things, and all kinds of metrics that determine, why should I buy this company? Why? What is this company going to do for me in the future and going ahead? But for my outlook, from my own personal view, I try to buy the dividend stocks. I evaluated my portfolio, and yeah, when I looked at my last couple of videos, I always try to just say to myself, okay, what can I do better? What can I improve in a sense of things to make this portfolio better? And when I'm looking at my portfolio, there's lots of things. My portfolio may be a bit bland. There's no Amazon. There's no FANG stocks. I'm looking at my portfolio. I was looking at a lot of shortcomings with this portfolio, and I kept saying to myself, how can I fix that? How can I make this portfolio a little bit more, have to have some growth to it. I was looking at the previous video, and I noticed that a lot of my stocks are buy and holds. They're buying holds. So I want to have the right balance. Where's the growth? Where's the I love dividends and growth, just working together, having the right balance, a balance of stocks that go up, and generally when stocks go down, I don't really freak out, because I know I'm going to get paid dividends, but just moving stuff around, just trying to make the absolute perfect portfolio. And I know it's impossible, really. It's impossible, because I don't think any portfolio is perfect by any means, but what we try to do is we try to take advantage of when the market is going down, and I look at certain dips and I say to myself, oh, okay, that's a good dip, that's a good dip. But let's just get into the portfolio. I think I've spoken enough about what I've been doing for the week and just general outlooks of of the market. But again, market volatility is back. There's margin maintenance. People who are trading on margins, they're starting to kick in. Guys are freaking out. The market's up and down, but you guys can see what I have been doing and some of the new stocks that this portfolio now has. We look at 3M. 3M is now in my portfolio. You look at stocks like Intel, you look at stocks like Visa, the Visa growth stock. So Visa's back in my portfolio. I think in the earlier videos I had Visa in my portfolio as a stock that I really liked. I like Visa's growth. I like what they're doing, and Visa. I'm just going to highlight Visa here. It's a good stock. It really is a good stock. It's a good grower. And I know that they don't really have much of a dividend yield, but the market cap looks good. I really love their earnings reports. They have been beating their earnings reports very handedly. And this is as I was looking at their 1 year chart. The 1 year chart. This is as good as of a chart as I've seen. Any chart really. This is remarkably trending up, and I just looked at it and I said, why am I not in this? Why am I not in Visa? Why do I not have Visa in my portfolio? And I looked at my portfolio from the last video. It's one of the things I lacked. It was one of the things I lacked. A solid blue chip growth stock that just keeps on growing. The 5 year chart. Look at this. Look at the chart. Look at this. It started from August 2nd, 2014, $44. We're trending up, and it just keeps going up. For the year, 199%. That's just remarkable. I literally have no words. And most people say, hey, Visa's back into your portfolio for an equity of $13,000, 10 shares with a portfolio diversity of 11%. Guys, I do not regret it. I do not regret this at all. Visa is a staple in my portfolio, and it gives me some more diversification in terms of having a growth stock that keeps on growing, that keeps pushing this portfolio in the right direction. That's what I want. A lot of people are, they're going with the Amazons of the world. They're going with the Facebooks, the Netflix. They're going with all these FANG stocks and technology stocks, which is good because they're going up. Amazon, I think they sealed a healthcare deal today, and it affected things. It affected, I think, Walgreens. Walgreens dropped 10%. So, Amazon, I've talked about this before. Amazon is taking over the world. They're getting into the healthcare. They're getting into the banks. They're getting into your life, guys. They're getting into your life, and they're running a complete monopoly on everything. But stocks like Visa is what I like. And it was one of the things that my portfolio lacked. I didn't have a grower. I didn't have a growth stock like Visa in my portfolio that would still pay me a dividend. So that's the reason why I added this stock to my portfolio. And I want to talk about Starbucks for a minute here. I had a whole bunch of shares. I think I had about 15 shares of Starbucks. And a lot of people are probably asking, hey, you have Starbucks in your portfolio, but why did you sell Starbucks? Why did you figure to yourself? Why did you say to yourself, okay, well, I'm going to move that money over to another stock? Some of that, I think, most of this money went into Intel, but Starbucks is on a great discount. It is. I think it's down 15%. What more can you ask for? Think about. I want people to think about when this stock was last at $48, last at $47. I think it was way back in 2015. Way back in 2015, this stock was around $45. And you look at this and you say to yourself, oh, okay, when I buy into a stock, I'm not only buying on a discount, but the stock just increased their dividend yield. They just increased their yield. Now it's at 1.86, but they just increased their yield from 30 cents to 36 cents. So the stock is increasing their dividends. They're increasing that cash flow. And if you buy in now, you would not only get a discount, but you're going to be getting more cash flow than what you would have had you bought it sometime around May 22nd, 2015, because back then there was no dividend increases. The people were just buying the stock, and the stock kept trending up. It kind of held around that resistance level of about $55, and then it started trending back. But now you buy into the stock, and you're getting that increase. You're getting that dividend increase because they already increased their dividend. They're all over the place. I really did not want to sell this stock. And I'm going to talk about why I sold Starbucks. Well, when stocks go on sale, guys, when a stock goes on sale, you have to ask yourself, okay, why did it go on sale? Because we really don't know where the bottom is to these stocks. I think I bought Starbucks around $51. I think it was like $52, but it kept trending down. And I said to myself, I looked at my portfolio and I said, well, how can I fix these shortcomings? How can I get a growth stock in here? My portfolio, I looked at Cisco. I said, that's my only technology stock. That is my only technology stock in this portfolio. And I said it before, I'm very bullish on technology. It's my favorite sector. I need to get some more technology stocks in this portfolio. And this is the reason why I bought Intel, because again, Intel is down 10%. It's a good buying opportunity. It was a great buying opportunity around $48 or so. I like their dividend yield. I like their market cap. Intel received a downgrade, and the stock that dropped, it was already dropping from 5%, and when it got that downgrade, so now the stock is at a 10% discount. And guys, I told you before, I love these 10% discounts. I love when these analysts downgrade stocks because they present buying opportunities. And when the stocks go down, you have to get more money into the market. And I want to buy Starbucks. I want to put Starbucks back into my portfolio. I do, but the reason why I sold Starbucks is because, again, I wanted to put that money into Intel. I just think that right now, at this moment, Intel is a better buy. Not to mention, I already had McDonald's in my portfolio, and again, I talked about McDonald's how they're improving their platform. They are. They're improving their platform. The stock has been taking a little bit of a hit this week, but again, I just think that McDonald's, they have solid reports. They have a solid dividend. The stock is going to, I think the stock this is just a temporary, now I wouldn't say correction, but the stock has been trending back. It has been trending back. It has not been doing good these last couple of months. And you look at the last 3 months, it's only down about 0.90%. But you look at $156, the stock still might be a little bit overvalued, but I still like these prices. And I trimmed my McDonald's stocks down because McDonald's was the leading. I had the highest portfolio diversity among every stock in my portfolio. So again, I'm sealing up the chinks in the armor. I just don't feel right having McDonald's as the highest diversity in my portfolio. Right now, I think 3M has the highest diversity in my portfolio, 17%. But I mean, look what 3M does. 3M is one of the best industrial stocks on the market, and they were on a great discount. They were on a great discount, and I bought into it. Look at this. The stock was around $206. It had trended down, and for the year, the stock is down only 4%. But look at this. For $252 all the way down to about $193. So, it didn't take a crystal ball to see that it was overvalued, but I just believe that 3M it truly is one of the best industrial stocks on the market. They're truly diversified in the industrial industry. I needed an industrial stock. I'm filling in the chinks in the armor. I'm correcting my portfolio weaknesses. Some of the weaknesses that I had in my portfolio in the last video. I didn't have enough tech stocks. I didn't have an industrial stock. There was no grower. There was no market growers like Visa in my portfolio. So I'm addressing what my portfolio really needs, and even though I lose some of that diversification of getting a dividend payment every week, that's a small price to play. That's a small price to play, getting a true dividend aristocrat like 3M. Which pays I think $1.34 dividend. So that's $13.34 for 10 shares, and I really wish I bought this even lower. If it keeps going lower, I'm just gonna buy more shares. But you look at my portfolio now. What do you guys think? What do you guys think about this portfolio? I mean, what is it truly lacking? I'm looking at this portfolio now. You look, there's a consumer discretionary stock, Walmart, one of the better discretionary stocks in the market. I put an industrial stock in here to get some more diversification in those industrials. The industrial sector has not been doing good. Okay, the industrial sector has been getting hit hard thanks to the tariffs, and right now I would say the industrial sector is facing a really bad correction. All the industrial stocks are down. Boeing's down, Caterpillar's down, 3M down. I think the Eaton Corporation down. All these industrials are down right now. So buy the dip. That's the reason why I wish I had more money to put into my portfolio, and eventually I will. I'm really good at growing this portfolio with cash, with just putting money in it myself, collecting dividends and reinvesting the dividends. But so look, we got consumer discretionary, we have an industrials, we have healthcare. I said that I wanted some more technology in this portfolio because technology is my favorite sector. So I ended up putting Intel. What better stock to put in your portfolio like a dividend, a good solid dividend blue chip stock like Intel? I guess you can look at Microsoft, you can look at Apple. Those stocks I really do like. I just think that right now they're not at particularly good buying points. I think that Intel was at a 10% discount for Intel. I thought that was a really good buy. So I put Intel back into my portfolio. So we have Intel. We have a consumer services stock in McDonald's. I sacrificed Starbucks, but I plan on getting back into Starbucks because right now I just think that they're on a really, really good, strong buying point. And once I put some more money in this portfolio, if the stock is still trending down, I'm going to buy Starbucks. So we have a consumer services stock. We have two of the best consumer durables on the market. These consumer staples that people use every day: bleach, Tide Pods, laundry, all these stuff that Procter and Gamble and Clorox. What they manufacture to simple people, to the everyday people who use these products unknowingly. They use them, and it's a staple, and they need them. They need to clean their tubs with bleach and all kinds of things. So you got two consumer staple stocks that pay that are dividend. These are dividend aristocrats. Even 3M and McDonald's. These are dividend aristocrats. Johnson & Johnson is a dividend aristocrat. So. That's a strong start there. That's a strong foundation of stocks. Southern Company, my utility stock. I was really bullish on NextEra Energy these last couple of videos, but I really like what Southern Company has been doing. I really do. The stock has been trending up for the portfolio diversity of 6%. It's a good utility stock. It's one of the better utility stocks that I think on the market. I know I said that for NextEra Energy, but when I discovered Southern that was on a discount, I knew I had to buy it. I knew I wanted Southern in my portfolio. Verizon killed it today with a 3% gain, and I talked about AT&T and them collecting time. I still think AT&T is on a good dip. they're still fairly undervalued right now at around that $30 mark, the $31 mark. So, I would say, hey, take a hard look at that. And if you do end up buying the stock, just know that you get a 5% dividend, a 5% dividend yield, which you can take full advantage of that. These dividends, you do not underestimate these dividends. These dividends can pay off after a while. They can pay off loans. They can pay off your bills. They can pay off your cell phone bill. They can put gas in your car. They can buy food. These dividends are really important to compound investing. They really are. I talked about wanting more technology in my portfolio. Cisco, people using phones, people using routers and all this sort of stuff. It's a good stock. They had a good day. Store Capital, we talked about all the the restaurants and just putting places, building structures and for restaurants like Applebee's and all this sort of stuff. Warren Buffett, he has some of this in his portfolio. MRZ and MRIT. And Mortgage Real Estate Investment Trust, they bounced back. They had a good day, and I think right now, today is their ex-dividend day for NRZ. So you look at NRZ 30 shares. I boost my shares up to about 30 shares. I think I had 25 in the last video, so that would be a $15 dividend if my math is right. And then, I looked at my portfolio and I said, okay, I want to grow. I want a grower. I want a stock that is a growth stock that, even though I still want it to pay a great dividend. And Visa's dividend, even though it does seem a bit low, they're increasing the dividend. They are increasing that dividend to 21 cents, 25 cents. It'll probably be 30 cents. It's a grower. It's more of a grower than a dividend stock, but my portfolio lacked this. My portfolio lacked like a stock like a Facebook or a Netflix, and I look at Amazon. They're still going. They're still trucking, and Netflix. And I think I said Netflix already, but Alibaba. That was another one I was looking at the other day. I think Alibaba. So this portfolio. It's very diversified. I think the only sectors that I'm not in, excuse me, is I think energy. I just think that right now energy is really high. The time to buy energy was way back in 2015 when the market was when that sector was going down. It was getting hit hard, but I don't like the prices for energy stocks right now. We're talking about T-Mobile. I mean, it's not T-Mobile, but ExxonMobil, Shell, Chevron, Valero. I don't like the prices for these energy stocks right now. They have to come down just a lot more. I said a little more, a lot more before I consider them buys. But so yeah, I don't have any energy in this portfolio, and I don't have. I think I lost Bank of America. So I looked at Bank of America. And I got Visa. I think Visa is the better stock. I know they're not a bank stock by any means, or it's more it's a financial stock that uses technology. That's how I look at Visa. And Visa it's a grower. How can you argue with this chart? This is a trending up graph. It is. It's a trending up graph, and they're doing very well when there's a lot of volatility. There's a lot of volatility in the market, and they just keep going up. So I want to be on that ride. I want to push this portfolio, keep pushing this portfolio in the right direction. So that's pretty much it for this is going to pretty much wrap it up. This video is really all about correcting those little chinks in the armor, correcting mistakes, not so much of mistakes, but looking at my portfolio and patching it up, if you will. Because in the last video I didn't have 3M in the last video. There was no industrials. I got some more tech in here, and I got a good growth stock in Visa. And I plan on buying Starbucks. If Starbucks keeps going down, which I hope it does, all the way down to about, I really love this $47 drop right here. I think that was a really good, a strong buy. But if I can once I put some more money into this portfolio, I'm gonna go after Starbucks. I'm gonna try to go after Starbucks. If it gets around $48, $49. I might wait. I might wait and see I might wait a couple of days to see what Starbucks does. But for now, I'm just gonna watch it on the sidelines. And again, when I try to get the dips, guys. Again, the dips are what count. Walmart. Look at this dip right here. I bought this dip, and then let's take a look at 3M. 3M dip. I bought it somewhere down here, somewhere in this little area right here. So again, look at Intel. Intel's down 10%. Buy the dip. You don't want to buy stocks when the stock is like all right here and the stock is pumped up and there's going to be a sell-off soon. You want to buy right in there, guys. That's where you want to buy. That's a good buying point. I think that Intel is going to trend back up. And, McDonald's, they've been down. I think Clorox, for Clorox, I bought this a little bit high, but that's the risk you take. That's the risk you take. You're in the stock market, so you have sometimes you got to take a little bit of risk. And this one paid off. I'm up $16. That $60 can turn into $9 tomorrow. I don't know. No one knows. That's the risk you play when you're in the stock market. But if you want to reduce your risk, you have to buy. You do your due diligence. You have to buy when stocks go on sale. Look at this, Procter & Gamble. I bought it somewhere right here. It's been trending up. I'm up $60 on Procter & Gamble. So, I just want to talk about patching up my portfolio, and you guys can comment. You can say, hey, I love recommendations. I try to read you guys' comments. I'm very busy throughout the day, but I try to respond to everyone. And let me know what you guys think. Let me know what you guys think. I want to try to get this portfolio to $20,000 by the end of the year, guys. I want to try to get this portfolio to $20,000 by the end of the year, and if I have to make some more adjustments to get that portfolio to $20,000, I'll do it. What more can I do with this portfolio? Should I get an e-commerce stock? I think that e-commerce is doing well. Look at Amazon. I think Alibaba. Alibaba's on a great discount right now. You look at Biozen and Shopfy and all these e-commerce stocks, eBay, all these e-commerce stocks that they're great growers. Maybe my portfolio can use something like that. I look at Netflix. There's a lot of talk about the IQ stock. I think that China stock, that the Chinese Netflix that people calls it. What about those little growth stocks? Should I put that into my portfolio? So let me know what you guys think, guys, and thanks for watching.